Hi, my name is Khan. Welcome to the next chapter. In this chapter, we are going to learn about advanced liquidity. So, what is advanced liquidity? It means there are some external and internal liquidity range which is actually used in a smart money concept. So, how we can take advantage of this liquidity and how we can identify these kind of liquidity and why it's so important and how it actually work. Let me show you exactly. Look at the first diagram which is here. So this point is our major lower low, this is our major lower high, correct? Market momentum is a bearish, so when market broke the major low which is here in a bearish market like this, correct? So after taking out the major low, that's called external liquidity, okay? And after taking the external liquidity, market need some fuel to go higher. That's why market grab the all major liquidity and then market push higher. So this is a called process external liquidity. External liquidity you can understand like this: major structures high or low is external liquidity. Every major high low is external liquidity. Same thing apply here because same both charts are similar and same thing work in a bullish market. Let me show you. This is a bullish market. As you can see here, market take after taking the high, market take a pullback before go continue upside. So these are all called external liquidity. Every major high or low act like external liquidity because once market take external liquidity, then market take a pullback, then market go again continue upside taking the minor and you can say internal liquidity, right? I will discuss about internal liquidity, how to identify the internal liquidity and what types of internal liquidity. Most of the time internal liquidity is a two types. First is a inducement, second is a engineering liquidity, and between the major swing high or low we can see minor structure, minor liquidity, and how we can identify. This is a very simple and powerful way to use it. Let me show you exactly how it works. First is identify the where is external liquidity. External liquidity is here, correct, and here market break the structure, took out the liquidity, and then market what happened after taking out the major liquidity, market take a pullback and first move like this. This is an internal range as you can see here. So first move is here, so this move is called inducement. As you can see here, this is our inducement, okay? And the extreme point, extreme high low is called our engineering liquidity. So what happened and what is mean of these two type of liquidity? First is an inducement, which is a 50% chance to market go in your favor and maybe market push downside to take engineering liquidity and then go higher. So engineering liquidity is our high probability zone to take buy or sell on this trade. So it's depend on the condition that engineering liquidity or inducement is valid or not. This will be we will discuss in upcoming chapter in entry parts in details. So you have to understand only in this video is inducement, find the inducement, find the engineering liquidity and external liquidity, because these three things are very important to understand, because without this liquidity inducement you can't trade. If you understand these things, these are a very important thing you have to understand. So market break the structure again. In terms of the structure, this is a break of structure, but in terms of the liquidity, this is an external liquidity. Market take the external liquidity, okay, and then market take out the most recent swing low which is here, and market taken out this low and market go higher. Before taking out any low or high, market can't move. Remember these things. Without taking any low or high, market can't move. if market wanna go higher, then market must be taken out low and then go higher, and this move actually generate after taking out this low. Okay, same thing apply in a bearish market is here. As you can see here, market take out the first high which is here, and then market push downside, and again what happened, market take engineering liquidity which is extreme, then market tap here and push downside, again break the structure, and this one is called external liquidity. After taking out the external liquidity, market take again pullback, because external liquidity work as a fuel to market push up or push down as a retest, or you can say in a simple way is a retest, but no, this is a pullback actually. Then market push higher and then again push downside. So this work as a external liquidity is a work of fuel to market go higher, and internal liquidity is here, and after taking out the internal liquidity, main move happen here as an impulsive move happen after taking out the engineering liquidity, after taking out the inducement, correct? So this is very important, you have to understand. Let me show you on chart that how we can read it and how we can trade it. So this is a bearish market. As you can see here, market creating lower lows and break the structure in a downside. It means market momentum is a bearish, and how we can read where is inducement and where is the engineering liquidity to take entries. As you can see here, before the break of structure, before this move, what happened here? As you can see here, this was most recent high was here, and this was actually our inducement. Remember one thing to identify inducement, first most recent high or low is act like an inducement, and extreme high or low act like a engineering liquidity. I mean is here. Okay, this is a first recent high. I'm talking about internal structure, not major structure. Major structure these are, okay, and all these major structure above or below is available external liquidity, and before this external liquidity we can see between this range you can see minor structure. So first minor structure act like an inducement, and extreme structure act like a engineering liquidity, right? So in this case, this one is our inducement, because this one is our first recent structure. After taking out the first structure, we can see sell, or maybe take a pullback and then market push more higher to tap on the engineering liquidity before push downside, right? So in this case, market tap on this inducement, and then what happened, market tap on this order block which is here, and then market push downside. Actual move happen after taking out the inducement and engineering liquidity. Same thing happen here, market break the structure and push downside, and after break this structure, where is our recent high is here, and now you can see market did not break this high, and still our where is our inducement? So in this case, market did not break this structure, okay, and then market created new low is here. So now our inducement shift here, right? So this high become our new inducement. So market must be taken out this high before go downside, and then what happened, market take this high, and again market push more higher to take more liquidity which is here, and this one is called engineering liquidity. So how we can identify that market take the engineering liquidity or inducement? Sometime what happen, sometime market take inducement and then drop, sometime engineering liquidity and then drop. So remember one thing, first is inducement is a 50-50% probability setup, and engineering liquidity is a high probability setup, because once market break this high which is actual is here, that means momentum has been shift bearish to bullish, right? And if you taken a trade based on the inducement, so this is our 50-50% chance of the probability to take in your direction and maybe against you. At least you have to understand that if engineering liquidity is available on the extreme, then very highly chances market push higher. If not available, then market push downside. And there are so many factors, different factors we will discuss in upcoming chapter about entry types, right? In this chapter you have to understand only inducement and engineering liquidity and external liquidity, how we can identify them. Then market again break the structure as you can see here. Then this high is our first inducement, and first high, recent high, is act like an inducement. Market break the inducement, break the recent high and tap on this order block, and then market push downside. Same thing happen every time, everywhere. Before take entry, you have to must remember one thing: sell after taking out high, buy taken out low in a bullish market, and sell when market taken out high, like here, when market taken out high and then sell, when market taken out high and then sell. Same thing is here. So this is a simple way to identify inducement and engineering liquidity. And in this case you will ask me, where is our engineering liquidity? So this one is our inducement, and our engineering liquidity is here, because this is an extreme point where we can sell. After this we can sell here, because above this sell is more valid, right? Because this one is our extreme point. So sometime price tap on the inducement and then push downside and push upside, and sometime price taken out the engineering liquidity and then go higher and lower. It's depend on the different situation. I will explain all these things in a details in upcoming videos, in upcoming chapter, in entry parts, right? So I hope you understand what I am trying to say. In advanced liquidity means engineering liquidity, inducement and external liquidity. Let me show you few more example in a bullish market, how we can read it and how you can utilize in your trading style. Let's see. All right, so you can see here in a starting, the first time market tap on the engineering liquidity, which is extreme zone to take a buy entry. And in this case, where is your first inducement? As you can see here, this low is act like a inducement, right? So this one is your inducement, and this point indication that engineering liquidity, correct? So after break this structure, you can see again market must be taken out the first low and then tap on this demand, this order block, and push higher. Again market break the structure, market taken out the first low, which is act like an inducement, and tap on the extreme order block and push higher. In this case, extreme order block and inducement and engineering liquidity, three things are similar, at a same point, right? This inducement and engineering liquidity are same point, because below this there is no engineering liquidity available. So engineering liquidity and inducement both are similar at this point, okay? Then market tap on this extreme order block and push higher. Same thing work in every market, every condition, right? Before the buy or sell, you have to understand, you have to wait for the inducement, at least inducement, right? Before inducement, don't take trade, otherwise you will hit the stop loss and you will be part of the liquidity, correct? So wait for the liquidation, wait for the liquidity, and wait for the inducement. When market take completely inducement, tap on the extreme engineering liquidity, then take entry, right? Then you will get high probability setup. So in this video I explain all about external liquidity, internal liquidity, about inducement and engineering liquidity. I hope you understand all these things which I explain here in a details, which will help you to boost your trading skill, boost your trading technical analysis, and to view the market.